And Barry, there's been a lot of activity since the last time we talked to you. What do you make of everything that's happened with some of the retail trading, some of these stocks like GameStop that have seen such rapid advances and then declines? And how do you think that plays out with the broader market as we continue to push towards new highs?
I think probably the missing piece of the narrative around, the GameStop saga and all the related names, Bed Bath & Beyond, AMC Theaters, American Airlines even, is, first of all, the factor, that this represents, which is low quality, really started to rally all the way back in November. The short selling or performance of shorts started to deteriorate all the way back in November. And November is an important time because that's when we got the vaccine efficacy results. So as I was watching, things unfold last week, all I could think of was what happened in 2003 after the 2.5-year bear market in tech stocks, the tech bubble burst. And then in 2003, we had a ferocious rally in technology companies internet companies with seriously challenged business models. In some cases, stocks had fallen from 100 down to 3. But then they had a ferocious short covering rally. And I recall some very big hedge funds who had gotten the bear market right being short those low quality names and long the high quality names like the Microsofts and all the world and just getting run over. And some of them actually went and folded. Of course, the same thing happened in 2009 with financial stocks. The highest quality companies underperformed, the lowest quality companies performed best. So this is a big part of the business cycle. And the specific timing of it makes sense as well. Right at the point when we went from 1 million vaccines per day, which was the number on January 24th on a 7-day average, up to 1.5 million per day. And the most draconian lockdowns, including New York City restaurants, were getting lifted. This all, was a big part of just a typical business cycle, and this specific business cycle, in particular. And so I think that's a big part of the story, and you would expect it to persist for some time. I'm not suggesting GameStop will go back to the highs, just saying that the lower quality parts of the market will have a recovery. Some might call it a dead cat bounce in some places, but this is typical of the business cycle. And I think that's the underlying story, is just how strong the business cycle is. The recovery in global trade and manufacturing, the recovery in capital spending in the U.S., which will really pick up. And you saw it in the spending on the cloud last night. And then what it means for prices. And so that underlying cycle story is really strong. It's really why this whole thing unfolded. And it's just a missing piece of the narrative because it's so cool to talk about man bites dog and the little guy beating up a bunch of nasty old hedge funds. So that's for me, that's the real story here.
In terms of the cycle, I'll say that you guys saw this coming. You did downgrade communications and tech to market perform back in August. So that kind of plays out with what you're seeing with the later stages of that part of the cycle. But what do you like? What areas do you think are worth a better than market average weighting?
It really is the cyclical sectors and inflation beneficiaries. So the materials sector, I'd been underweight energy for years and years and upgraded that around the turn of the year. The financial sector, though, I'm somewhat concerned about the policy outlook there, but the financial sector for sure, and the industrial sector, because of the real part of the real story in the recovery in global manufacturing that's just so persistent. I mean, we saw it in ISM this week. We've got production, orders, supplier deliveries, prices all surging, and inventories, particularly at the customer level, falling. It's recovering not just from the pandemic, but from the trade war, which caused a recession in global manufacturing, running all the way back to mid-2018. So those cyclical sectors are really powerful. And then, of course, what the implications for the bond market are big as well. I stuck my neck out back in August and called the end of the 39-year bond bull market. But as long as the inflation component is driving bond yields up, and that's what's happening right now, five-year inflation break-evens just keep ticking up every day. They never had a setback in January. As long as that's going on, we really are getting inflationary, a reflation surge that should push all those cyclical sectors higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.